Let's take an example in order to explain the accounting for the breakage and for the gift cards. Assume that an entity sells a $100 gift card to a customer with no expiry date, so it is open. The entity maintains statistics on its gift card. So based on the historical data, the company provided some analysis and some statistics and reached to a conclusion that 80%, historically only 80% of the gift card are redeemed, and the 20% are unexercised or unredeemed. So this 20% we are going to call it as a breakage. Now, in the first year, assume that the customer makes one purchase of $50 using the gift card. So let's understand the case. Total purchase that the customer did was $100. And based on the statistics and the historical data, we are estimating that 80% will be redeemed, which means $80 will be redeemed, and 20%, $20 will not be redeemed, and this we call as a breakage. Now, can we recognize this $20, which is the breakage, as a revenue today? The answer is no, because you need to recognize revenue of this $20 as per the customer is going to consume and is going to utilize his gift cards. So for example, in the first year, he is going to utilize $50 of the gift card. How much is the total that I'm estimating that the customers are going to utilize is $80. So the customer is going to utilize 50 out of 80. And this is the same percentage that you are going to apply on the breakage, which is $20. So if you divided 50 by 80 times $20, which is the breakage, this will result in the amount of revenue of the breakage, which is 12.5. This is the amount that I'm not expecting to have a significant reversal later on. So this $12.5 will be recognized as a revenue today, along with the $50 that the customer redeemed. So the total revenue in the first year will be $50 already redeemed plus part of the breakage, which is 12.5. So the total revenue in the first year is 62.5. So this is the total revenue in this case. Again, to conclude the understanding, if the customer is giving a gift card, so this is a contract liability at the beginning, and this will be considered as a revenue later on when the customer starts to perform. So if the customer is going to utilize the gift card later on, we need to recognize revenue based on the utilization of the gift card. But based on the historical data, you need to determine how much you are estimating to be redeemed of this gift card and how much you are not estimating to redeem from the customers from the gift card. And this part that you are not expecting to redeem, you need to reach a conclusion that there is no significant reversal of this part. So in this case, you need to recognize revenue based on the redeemed part and part of the breakage as per the customer performance of the gift card. Thank you.